Hello traders, welcome to the post-session review. Today is Monday, July 22nd, and today's post-session review is very important, okay, because today we had a lot of losing trades. We lost 91 points today, okay, in it at a time and place where our account is relatively fresh, where we got into some drawdown last week. We were able to recover and get back where we wanted to, and today we gave all that back and we hurt the account. So we're gonna drill down into this. We're gonna see if it was me who aligned myself improperly with the price action, with the strength and weakness of the chart, whether it was myself who just did not follow my trade plan, or whether we did follow a trade plan and that's just the way the cookie crumbles sometimes. Okay, but the important thing here is, although we had a significant drawdown today and although we had significant losses today, we're not going to allow that turn into an emotional process for us and allow us not to execute the way we should moving forward. Okay, is this unfortunate? Yes. Okay, is this a problem? Maybe, maybe not. That's what the post-session review is going to do. It's going to let me know whether I messed up or whether that's just the way the cookie crumbled. And if that's the way the cookie crumbled, then we apply money management and move forward and nothing changes. Okay, if it's me that didn't follow my trade plan, I need to fix that. I need to find out why I got out of my trade plan. I felt like I was with my trade plan today. I believe I followed my rules. In fact, I was going to get to a break even sooner, and I decided to follow my rules because that's what I'm here to do, and readjusted my position and ended up taking me out. The only winning trade I had today for a 10 point, but it was on one contract. Nonetheless, we're going to break it down. We're going to look at this step by step and see what happened. Okay, and then we will have a plan moving forward. Okay, and that plan is going to be follow the trade plan and maybe not implement the money management. We'll see. First things first, let's bring down the money management spreadsheet right here. And we had $915 loss, $915, that matches. The account here, we have 4491, 4490, so it's about there. We'll adjust that with when the actual commissions and the slippage and all that gets settled out. We'll adjust it to more precise. But this is where we're at. We see that the account is $10 or $9 below our threshold to go back down to one contract. So we're gonna go back down to one contract, and I want to get maybe 20 or 30 points back above that before I go back up to two contracts. Okay, the money management formula is not going to get me to two contracts until I get past 6,500. Okay, but I feel confident in my ability to trade at a high level. I don't let the emotions interfere with my process. I don't like it, but it doesn't bother me too much that we have this drawdown. This is part of trading. This is part of what we do. Okay, and it's important for you guys to be able to see that not only does this happen to you, but it also happens to me. And all we have to do is just manage it and control it, not let it control us. Okay, so we're on the same page here. 915, 915, 915. We'll make the slight adjustment to that after the settlement comes out, and then we'll see that. We are going to drop down to one contract tomorrow, okay, to see if we can get about 20 or 30 points above 4,500, and then we'll stay on two, and we'll play back and forth like that. You know, sometimes you can get 2 or 3 trades to go in favor, and you can recover this very quickly. Sometimes when you drop down to one contract, it takes twice as many points to recover, and it is what it is. Okay, so that's it. Let's get into the chart. Let's get into the price action, and let's see what happened today. Okay, so right off the bat, we know that the market was pretty bearish overall, right? Market was coming down, then the market produces on the intraday. Okay, we had a move here, and then it came down and made a new structure high, followed by a complex correction here, and then another new structure high, followed by a complex correction, another new structure high, and then a complex correction, new structure low, expectation failure, followed by a retest, and then another new structure low, followed by a lower high and another new structure low. So I was looking for shorts, okay, And as price came up here, I missed this entry. I wanted to take this entry, but I missed it because I was talking. But price came down to retest, and I said, okay, great, I have another opportunity to get in. So I got in here, and then price came back, okay, and took me out. This was the last main swing, right? So off the bat, good entry. Unfortunate, got stopped out, no big deal, okay? Then price came up, made a new structure high again, right? This is the expectation failure. So now we're dealing with this whole thing as a main swing, right? Which is why my stop was below that area. As price came back down, it offered me an opportunity to get in. Offered me an opportunity to get in with great risk reward in an area where the buyers were active, here and here all across. So I felt good about taking that rotation to the upside, okay? And then that ended up being a full loss, okay? So again, another good entry, another good risk reward. It's just another expectation failure. So we had expectation failure, okay? And now as price came back, gave me an opportunity to come in again, okay? So I got short there. It was with one contract, and I got in with one contract not out of fear. I got in with one contract because of the account size and because my stop had to be up here, okay? So as that happened and as price started moving down and got to this area, I got to the break even, okay? And as price got down here into these lows and price started coming back up, you know, I said, oh, I'm gonna lock in, you know, 30 points. But then I said that might be an emotional response. What do my rules say to do? My rules say to get to a break even and trail at the 127 or the 1-to-1, whichever comes first. Neither conditions occurred, so I got my stop loss back to a break even. I actually locked in 10 points on one contract, was 50 bucks, okay, and I got taken out, okay. Again, price has made another new structure low, complex correction to the upside, godly pattern here, okay, completion in this area. So I got short on the rotation, and then price, we started playing this endless game of watching your price get closer and closer to your stop loss. It is what it is. I think that I traded the order flow of the day. I think that I traded the strength of the market today, but I think that, you know, the buyers were able to come back in and slowly wear down the selling money that was coming in and transition from a bearish market into a somewhat bullish market, okay? So unfortunately, that was the situation today. It didn't help that these swings were a little large and the stop was a little wide, but I'm very pleased with the fact that I followed my trade plan. I'm very pleased that I still believe that I was aligned with the order flow and what the market was doing and producing. It's just so now that we were plagued by expectation upon expectation failures. You know, we had one expectation failure, two expectation failures, a good trade that came in, you know, that because of the risk, we had to scale down and manage our rules that gave us a break even. And then we got short on the expectation and then that failed again. So I think that we just had back-to-back failures, and we were victim of a choppy overall market that just was pretty, I wouldn't say it was non-directional, but overall it was a range-bound market that was slightly bearish, that has turned slightly bullish again, and those things put us, you know, in positions to take good trades that ultimately failed. So again, not happy with the outcome, not happy that I took on this kind of a drawdown, but I'm pleased that I followed my trade plan. I'm pleased that I realized that I was not listening to my trade plan and I readjusted, okay? And then I traded on my trade plan, put the stop where I needed to be. So all good things. I applaud my trade plan. I applaud my decision making. I applaud my process following. We just came up on the wrong end of the stick. So you know what that means? It means nothing happens. It means there's nothing that we did wrong. It means that nothing is broken. It means that the expectancy is still on our side. And the only thing we need to do is keep executing on our trade plan and deploy money management strategies if need be. Okay? I already told you that we are at 44.90. It's actually 44.91. We're a few cents off. 45 says that's where we come down to one contract. So we're going to come down to one contract. Okay, we're going to listen to our money management formula here. When we get above 4,500 again, like 45.30, 35.40 or so, we'll go back up to two contracts. Anything above 4,500, I'm going to go up to two contracts. Anything below 4,500, I'm going to scale down Why? Because um, expectancy is on our side. We're highly accurate, and and our goal is to get to this 6,500 as quickly as possible, so we can start being more aggressive with our position sizing. Okay. I hope you guys understand that. I hope you guys are happy with the outcome today. Even though it's not what we want to see, I think it's important to see days like this. I think it's important to process days like this. I think it's important to get behind the emotional component of this, the which is a psychological component, and the part that most retail traders or people with small accounts get affected by. Okay, we're not here to care, okay, that we had losses today. We're not here to care about filtering pain out. We're here to take our trades. If the outcome is not there, we revisit. Okay, we see that we followed the rules. We see that we were aligned with the order flow. We see that everything was fine, and the outcome wasn't what we wanted. Okay, so the reaction to that is I don't care. Okay, where's my balance? Where does my money management say to do? And it's business as usual tomorrow. All right, so you will see that tomorrow, and you'll see how nicely and quickly we come out of this drawdown and how insignificant it is. And it's also going to be very important for you guys to see, okay, that even a professional trader like me gets into heavy drawdown from now and then, okay, but it's managed, okay, very important, managed, okay. So no big deal. And let me get back and show you the Gartley pattern. Let me show you some other harmonics, which I forgot to do in the beginning, okay. So let's do that. So we came to our beginning of our day here, and we see that we have a clear swing here, and this is the lowest point. So projecting that forward takes us to right about those highs where the market reacted. We see that we have a smaller proper correction here, so that's something that we can also project forward. Small short lowest point is here, so we can bring that forward there. Comes up here also very nicely at these highs, okay. And then we have a initial expectation failure here, right? So that's something that we can go ahead and project to the downside, okay. We don't have a close above here, okay, so that's just a retest that failed, okay. Bringing that forward, okay, brings price into this area. Got a little bit overextended there, okay. And then we see that the market was very precise there again, okay. Technically we would do this, and some of you may see that from my chart earlier as I was projecting that ended up not happening, and then price came down to the downside here to having another expectation failure. Proper correction did not occur until this point here. This point did not actually reach the 38%. As you can see, it fell short. Price came to here, 38 is here, and then price came once we adjust this, price came to the 50% fib right here and got short, and then price did move very nicely in favor. I think I was up 40 something points. Let's see, 67 points, okay, which was nice. So it wasn't fun to give that back, but rules are rules, okay. And then we got short again, and then we missed out again, okay. So we can see that another expectation failure here. This was the main, oh crap, sorry. This was the main swing here, okay, which we would technically project to the downside, okay. That did not occur. And then we had another main swing here, smaller, on a smaller order flow, right, because we had a proper correction and new structure low. So we have this down one here, and that was what I was trading. I was trading this. I was looking to get somewhere between here and here. We do have a small Gartley pattern here. We have kind of it looks like this. So all in all, guys, the outcome is not what we want, but it's exactly what happened, and that's okay. Okay, it's definitely okay. Price, the pattern did hit the break-even point, but I was going for at least a 618 to get to the break-even, and then trail on the expectation at hand. It turns out that the buyers ended up conquering. Okay. At first it was the buyers who were in control, then that switched over to the sellers, and then it switched over back to the buyers. So we had, you know, we had a few change of strength, change of order flows here today by a bunch of expectation failures. So we fell victim to that today, and we got chopped out of this market. Um, Again, I'm pleased. There's nothing wrong with what happened today, and all we have to do is just manage it. Okay, so tomorrow we're going to be on one contract, and hopefully we will perform well tomorrow. We'll have a good amount of points coming back in. If we can take a nice first trade of the day, that's very nice, and it gets us above the 4,500 balance, then we'll switch back to two contracts and see if we can capitalize on that momentum. Again, the threshold for me is 4,500. We're below that. We're going back down to one contract until we get above that. I like to give myself a little cushion, and that is the reason why the money management formula, even if you start at 2, wants to take you back down to 1, because it wants you to build a comfortable cushion. If you get into a drawdown in the beginning, okay, it wants to make sure that you don't, that it turns into a problem, okay? But it's not going to be a problem. We're going to manage it, and we're going to be fine. I just wanted to make sure that you guys saw when we have a losing day, and when it's a heavier day than you would expect, and you feel defeated, maybe the emotions are messing with you, you need to just take a step back from that. Look at your day, do your post-session review, see what the expectation was, see what trades you took, see what trades you should have taken that you didn't take, okay? And then you can look back and see whether there was a problem or whether it's just next. And for me, this is just next, not anything to really be concerned about, other than we have to implement some money management, and that we should be fine. Hopefully this post-session review has tremendous value. I think it's an important and critical aspect that we have post-session reviews. I think it's even more important when you have a day that looks like disastrous like this, that put a big dent in your account. You just revisit this day, look at your trades, look at the order flow, look at what price was doing, and see if you acted in accordance with your process and your trade plan. If you did, nothing happens. We move forward. We apply money management if we have to. I'm saying that over and over and over again because it's that important. Okay, nothing to do, and tomorrow we'll have more and better, I guess. So that's all. I'm going to work later on this evening on that Fibonacci extensions and the harmonic projections, and I'm going to do a nice little video on that, and I'm going to publish it probably tomorrow, or depending how late I get that done this evening, I'll publish it this evening. So good luck, guys, good trading, and we're just going to keep doing what we're doing. Okay, have a great one, and thank you.